Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Today we're talking Lodging 2017 with Mark Woodworth. He is with Head of Lodging Research at CBRE Hotels. And whether you are running a business or you're a business person or you're running hotels, one of the curiosity things for us, I think, is what's going to happen with rates and occupancy down the road. And if I'm planning trips for November, which I am this summer, even planning something for December already, should I lock in a rate now, or should I wait?
I mean, I know you like to go on these exotic boat trips, and I don't have a good handle on that. But
Right.
if you want to take a more traditional trip, whether it's for, as you say, vacation, personal reasons, or corporately, if you're planning a function for your business or attending a trade show or convention or something of that nature. The advice now, again, I mentioned earlier that occupancy levels in most markets are at all-time highs. So scarcity is very much a real issue. There's a lot of unknowns about what's going to be happening to the economy in the near term, given the change in administration, new policies, and so forth. The conventional wisdom seems to be thus far that we could see a real surge or lift in the economy in the near term, i.e. see what the stock market has done in the last few months. So history tells us that lift in economic activity does find its way into hotels, i.e. greater demand. So given that we're already at high occupancy levels, if we see a surge in demand, we could see a commensurate surge in pricing. So I would say, if you know today that you're in a position to make a commitment downstream for a room or a resort or whatever it is that you want to go to, I would be biased towards making it more sooner than later.
Yeah.
Because if I think the likelihood is more probable that we could see stronger market conditions than what we have been contemplating of late.
Okay. And one impact there, obviously, is a new supply. So do you expect new supply what do you expect for new supply in 2017 and 18? And what types of hotels are being built or should be built?
Yeah, more and more supply. This 2017, again, we're going to see on a national basis, we're going to be right at the long run average change. It'll be a little higher in 2018. So again, overbuilding is not something we're concerned about, but again, the supply is growing. There are some markets that again are softer, so we'll see the supply growth in those begin to dissipate. But it is interesting if you think about what are developers actually building. And what we've seen thus far in this cycle is, if you think about kind of the middle of the market, and in our vernacular, upscale and upper upscale hotels, think Hilton Garden Inns, Marriott Courtyards. That seems to be the predominant property type, 150 to 200 rooms, modestly priced, not too high, not too low, and so forth, is we're seeing the most of.
That's most of what people are building.
What people are building, and that's for the obvious reason, that's what people want.
Yeah.
So they're delivering that product to them. What's really different about this particular cycle, and it's something, Michael, if we go back over long-term history, you see every 30 to 40 years in lodging this happens, you do see lots of innovation, creativity, new product types coming in. So what we have seen a lot of, and being more and more, are what we think of as lifestyle or boutique hotels. That's where the beautiful people like you like to go. That they're not, if you think about the attributes of like I say, a lifestyle property, and benchmark those against what people have come to expect of a Marriott, a Hilton, a Hyatt, and so forth, where the last 30, 35 years, companies have grown their business by making sure that the customer experience from location to location was pretty much uniform. No surprises, the standards are consistent. The metrics now are very different, where it's more of, we want to make sure that the service delivery quality is consistent from location to location, but the physical experience that you'll realize by going there could very well be very, very different. And more specifically, typically it's in keeping with the local environment in which the property is located. And whether that's the kind of restaurants, food and beverage, all the way through the types of technology that you're seeing in these newer property types, it's really caught on, and they've been doing very, very well.
Yeah, and that's very interesting. It's like some people like to go to that chain where they kind of know what to expect. And,
Sure.
But especially millennials, I think maybe they're looking for that experience. Whether it's good or bad, they want something different.
Something different, right?
Right.
You're exactly right, yeah.
Well, Mark, as the end of the show here, I'd like to ask you a tip for maybe an investor or an operator in the hotel industry as they go into 2017.
There's opportunities out there. They're not going to be easy to find. I think investors are going to continue to be more and more attracted to lodging, to fixed assets in general. We didn't have time to get into it, but to the degree that inflation starts to move towards the middle of the radar screen for people as an area of concern, what we do know is historically hotels end up being a really preferred real property type, simply because I have the ability to change my price every day.
Every day, yeah.
So to the degree that becomes a looming concern, it doesn't seem to be right now, but that would be a good hedge certainly against it. So that may be a factor that we see more and more investors considering.
All right, so you're bullish, and you think the market in general is bullish on investing in lodging?
Oh, I think so. I think we're going to see them move back in, and the public company prices have come back very nicely with the overall stock market rebound. So I think it's in foreign capital interest in U.S. hotels has been very pronounced the last couple of years, and no reason to think that won't continue.
Okay. And final question for you, and I asked you this question many, many years ago, I think the first time I met you, so I want to ask you again because I love the answer then. I want to see if it changed.
Uh-oh.
So if someone's coming to you and they're going to develop their first hotel or buy their first hotel and get into the industry, what do you tell them? How do you start the conversation?
I tell them, and I if I haven't said it, I'm sure I did, but an old friend, good friend, Michael Kay, used to run Omni Hotels. I first met Michael years ago. Michael, I've adopted his wisdom, and that is I have a moral obligation to spend at least a half hour, 45 minutes to tell you why you should never do it. Right. And if I still haven't convinced you after that, then let's go find a good deal.
I like that. And go find a good deal.
Yeah.
Mark, thanks for joining us. Appreciate you being on the show.
Great. Thanks, Michael.
And thanks for joining us on one of the radio stations around the country, iTunes, YouTube, or the show website. We appreciate you being with us. And be sure to connect with us on your favorite social media sites. You can find them all at CREshow.com. Until next week, be sure that you always lead, learn, and laugh, and join us for the Commercial Real Estate Show. Hey there, thanks for checking out the Commercial Real Estate Show. Don't miss a video of special interest to you. Be sure to subscribe below. And if you appreciate the videos, be sure and thank our sponsors. There's a link to more information about them in the description. For more videos, podcasts, and articles, check out CREshow.com.